All right. Hi guys, sorry for the delay. As promised, this is the HanseCoin Saturday discussion panel where we're going to talk about HanseCoin, obviously asset-backed tokens in general, and depending on the questions that come in, perhaps the future of asset-backed tokens on the blockchain. So I have with me here the two guys from HanseCoin. You guys, if you watch the AMAs from CoinMetro, you've already seen these guys in action. So we have Axel over here and Chris slightly behind me. Over the past, I guess, week or so, there's been some questions filtered through via Telegram and other channels, as well as perhaps on Reddit. And these have all been kind of compiled, and these guys are ready to answer those questions. I'll provide some commentary if I have any, and then we'll try to jump in to do some live questions. So we'll see what happens. If you guys, obviously, I was going to say if you guys aren't seeing us, make sure you get on our channel, but if you're not seeing us, you wouldn't be able to see this to get on our channel. So we're just going to kick it off. I guess they already have some questions ready and waiting, so they'll jump right in with their with the questions that were asked, and we'll see how this goes.
All right. Yeah, well, welcome to our office first and foremost. This is the first time we're doing this, so if we make a real fool of ourselves, enjoy it. Right. We had a number of questions as to how what we're doing actually works, why it makes sense, why to do it. I mean, maybe we start with not the philosophy, but why we're doing it. We tend to believe that there is a gap, and the questions which we had is, why can't I just fill that gap with other crowdfunding opportunities? Why can't I just invest in other equity platforms and the likes? You can. There's no question, you can. But can you actually get access over time through a platform to what then becomes tokenization of projects where the overall contribution requirement will be anywhere between 1.5 to 8 or 10 million in euro. That'll be harder. Now, there's possibilities, as always, but in this instance, our idea is we develop a platform which gives exactly that concept to the market and finds people who are willing to, at the beginning, sponsor the development together with us, because we're investing in it, we're doing our work, and then create that platform so that as soon as it's ready, in the next weeks and months, we can provide that access over time. That's the approach. Now, how does that work? We are currently in the process of developing infrastructure and software solutions to make sure that what works technically and in theory becomes practice, and it's regulatorily compliant. That sounds easy. It isn't. It just needs a lot of work. You will have experienced this with Kevin and his exchange development, brokerage exchange development. That's a hard chore. It's a lot of detail. It's significantly more than people could expect, given the fact that there's a cascading waterfall of new regulations coming in every single day, the market developing quickly, blockchain advisory is now the biggest field we can see in the market, because there's so many people trying to find their approach and seeking advice, and others rendering as silly components as possible to make some money. Now, we're trying to do something small, solid, compact, which works. That's hard. So, why do we do it?
Well, we're having a first mover advantage here. I love being pioneering spirit. This all makes sense. A number of notables in the field have said assets will be tokenized. This is inevitable. And we saw the magic behind marrying, in this case, real estate, the hard asset, to the blockchain. Now, there's a lot of criticism, as you know, in the field, in this ICO space. Most recently, you might be aware that Nouriel Roubini himself, Dr. Doom, I've had words with him, in a little sidebar here. We kind of, I don't want to say cornered him, but let's say intellectually, we were at a gathering in New York City, and he was doing his blathering about the blockchain space, etc. And we had some very pointed questions for him, and instead of answering them, he changed the subject. Now, what I see most recently is he was challenged to a duel of sorts against the creator of Ethereum, Vitalik Buterin. Laura Shin tried to set it up, and he backed away, saying calling her a shill. And Laura Shin does Unchained podcast, and I think it has one of the highest listenerships. I've listened to many of her podcasts. I think she does a good job. Stanford University, she has a good, solid understanding of the space. I think she is a good broadcaster and interviewer. So for anyone to say she's a shill clearly shows that he has no clue about some important people in this space. Now, I hope certainly that he will have some sort of debate with Vitalik. I know that he was testifying in front of Congress, and the things he was saying were just patently untrue. Things like the blockchain, these platforms are not scalable. Where is he? Doesn't he know about the Lightning Network? Does he know about Rootstock? Doesn't he know about the sharding concept? He calls sharding vaporware. And the other testimony he said was, mind you, the things he's saying are factual. I'm not saying he's lying. He is saying what is truth now in the space. But he is completely negating the point of technology. Technology evolves. If you took his view, by the way, I can't say this on record. It's just things I know about. Anyway, if you took his view of technology and say, let's apply it to the internet. Well, sure, the internet back in the day, I don't know how many of you remember, but in 1995, they said that the internet, you'd be crazy to use your credit card on the internet. It's used for drugs and pornography. Now, at that point in time, yeah, that was a fairly true statement. But of course the internet evolved, technologies evolved, blockchain evolves. I've seen so many intelligent minds migrate into the space, far greater speed than in the days of the internet. So I think we're going to be seeing a lot of progress over
because of the internet, by the way.
Yes, absolutely, absolutely.
So the concept which he then, hopefully now ruefully said, would never work other than those insidious things to be spread, morally ambiguous and whatnot. Yeah. That all these things actually now in internet, what is it, 3.0, whatever we want to call it, in the current state are actually supporting, are the basis, are the backbone to that development.
There's short-sightedness, let's say, on the side of the people that are let's say, against or believe that this isn't going to evolve into something. But you also have, I don't know, overly long-sighted people on the pro-blockchain side. Meaning that you have people on, both sides have their crazies, let's put it that way.
The revolution.
Yeah, both sides, you have people on the blockchain side that say, I don't know, that there's going to be some fantastical new economy and that regulators don't matter and all these things. And you have people like our friend Dr. Doom, who obviously are completely short-sighted, and you would think somebody that has at least, he might be Dr. Doom, but he's still a doctor, right? Can we get a... I think he would actually expand his thought process and understand that, yeah, technology does evolve. Now, the problem is that on both sides, I talk about this on my own AMA quite often, is the soapbox, right? So they gave this asshole, I'm pretty sure kids aren't listening, I'm going to say it again, asshole. This asshole got a soapbox, right? A big one. He got to speak in front of Congress, which doesn't really say much about our elected officials in the United States, to be quite honest, that they would allow him in to speak. But hey, he was there. But, he got a soapbox to speak from, and people heard what he said. And obviously a lot of people don't necessarily look at blog posts and read about things about blockchain on a daily basis. So they hear this and they probably believe it because, hey, the guy was invited in front of Congress, so he must know what he's talking about. So again, it comes back to the fact that people that actually know what they're talking about need to build soapboxes. And usually what happens is people that know what they're talking about don't care about speaking to the public. It's the guys that either need an ego boost or simply just like getting a little fame under their belt, who really like to create the soapbox and speak. And we need to start pushing people who actually do know what they're talking about, are actually on our side, that can go out there and actually make some noise. Because obviously we don't want Dr. Doom running around talking to Congress and talking to I don't know who else, and having them listen to him. Because again, the bigger the soapbox, the louder the dogs that barks the loudest gets heard. Unfortunately. And he's barking pretty loud. I see him everywhere right now.
Well, brings us back to the question.
Yeah.
We're normally not in the media. I mean, you are, because you've already developed a platform concept. You've gone into the market, and you have to explain why things matter. Yeah. We now, given the fact that blockchain requires us, essentially enables us to talk to people directly, we actually have to do the same thing. We can't do it peer-to-peer, so we'll try to do it in this format. Whether that will be sufficient, you have to tell us, but at this point in time, let's just explain where we are at. So when we talk about that gap, you've seen a couple of questions which came out from various parties. the gap is still the same. The gap remains due to completely sensible and logical requirements. If you take crowdfunding for debt, crowdfunding for debt has certain cluster and exposure limits, risk exposure limits. Whether these are 750k in, let's say, euro, US dollars, forget the difference. We can all talk about foreign exchange for a moment if you like, but let's say 750k in euros. That is a typical cluster level on the low end. And then there's a risk exposure which people can take and the platforms are willing to take to then provide to their investors, respectively their participants, depending on whether they are regulated or not, to bring out product to a market of interested parties. And they do so, this risk exposure is being allocated on the basis that they have picked the project. Fair enough, that's good. They should pick the project in some shape or form because that's their obligation to actually vet the project, go through it, do all sorts of things. Having done so, they end up in a situation where they're acting like their own little credit committee. Fair enough. Now, do they really undertake all the risk assessment? No, they don't. They portray information which has been given to them. Now, that is a risk in all these chains. But most of all the times, these cluster exposures, which they have, end up at about 1.25 to 1.5 million, still talking euros. And then from there onwards, participants' equity and projects which require additional construction financing through equity, or projects which require additional support, do not have that access up until a certain level, let's say 8 or 10 million. And why is that? In Europe, there is a MiFID II, there is certain regulations which lead to certain caps, and they set a regulatory cap, which is fair, that's fine, that is the rule, we follow the rule. But at the same time, it is relatively hard for most people to actually allocate capital if there is no sponsor or no, say, entity arranging the transaction. So, as such, we see no closed-end funds, no open-ended funds going into these market segments, A, because they don't have the distribution capacity for such projects, or, and for most, that the transaction cost associated with creating the fund, documenting it, arranging the transaction structure, do not lend themselves. They are too high for any sort of transaction. As such, many of these projects in that gap between, let's say, 1.5 to 8 or 10 million euros end up having a smaller secondary market of people who could participate in them. Now, you can do a little bit with friends and family, that's fair enough. Some can do more, others can do a little bit less. Sometimes you have private equity investors, that's fine. And venture capital investors tend to withdraw from sectors which they do not see to be as liquid or not as promising for growth, or should we say, not as explosive in terms of growth potential. They want to go for the 10x, the 20x, the XX, whatever. Now, many hard assets, from industrial equipment to real estate and even ships, do not fit into that category at all. Many projects start small. They start solid and then can grow. So you can do one project, you can do another. That's why we said, okay, fine, this is the gap which we have seen in various other markets, and that we wanted to address. That's the approach. You can say that there are some funding platforms who do this successfully in the market. Fair enough. Look at their cost structures. Look at what ends up arriving in the project eventually, if it does, and whether this front loading of cost is actually good enough to sponsor the project. So our approach was, so how can we find ways to drop this transaction cost and make it more effective and make the whole transaction more efficient and get this closer access of people who could participate in future. Now they can't do so today because it's not regulated yet. And yes, there is a step to be made from utility tokens to securities or security tokens or different versions thereof, hopefully then regulatorily compliant. But that's a step which we have to make all together. We actually have to build the platform. We have to create the structure. Now we're very close to that.
Just a quick comment on there, because there's a lot of, I was talking to somebody yesterday and they were telling me how, nobody wants to invest in utility tokens anymore, everybody wants to invest in STOs. or security tokens. There's no such thing as a security token. Let me just throw that out there. Anywhere in the world, absolutely no such thing as a security token. If someone's offering you one, they're doing it either for the marketability of the STO acronym, or they simply have no idea what they're talking about, or a combination of both. There is no such thing. So what people are defining now as a security token is basically a token that has a prospectus. That's pretty much it. Now, they may tie in other things like dividends and other things. Then they're going directly into what is a security under securities law in pretty much every place in the world. And the fact is that tokens, whether you're in Switzerland, who has guidelines about utility and payment and all these other token types, or Estonia, who also has guidelines about payment tokens and utility tokens, security tokens, all tokens, however, under current legislation, seeing as no legislation exists for tokens, are securities. That is the easiest and most common way that they are classified. So every token right now would be considered, if you go through an ICO or some type of token sale, a security. So I think one thing that Axel didn't mention was that beside the funding gap, let's say, is transferability. So that one of the big issues right now is that, let's say you get involved in some type of crowdfunding platform and you put up some money and you want out. Sorry, there's no real easy way to get out. You're in, and you're in for the long haul. And if that person defaults, or that, if you're on a crowd lending platform, for example, and you loan money to someone and they defaulted, that's it. Even if you knew they were going to default, you have no way to transfer your ownership out. Let's say if you saw the writing on the wall and said, this particular whatever project or person or whatever I think is not going to be able to default, I want out. You can't get out. With tokens, you can go on an open market and transfer your ownership quickly. And with backed by liquidity on an open secondary market, and that's a big thing, because when you deal with this, the bigger amounts of money get funded by big institutions that can handle risk on their side, and they can mitigate risk by just spreading their money around, and they have lots of money to spread around. When you're an individual and you're investing in some type of crowdfunding or something like that, you may not be able to mitigate your risk. You may have over-leveraged yourself or what have you. So you need a viable way to be able to get in and out of that asset. And this type of asset-backed token, especially on a secondary market, allows you to do that. You can get out when you need to, whether it's because of some, you decide that you're no longer willing to take the risk, or you simply need access to your capital, which is not possible, as far as I know, with any type of crowd lending or some type of platform of the like.
Yeah, I mean, I do believe that, for example, certain platforms such as Thunderbeam have attempted this, and there is a limited transferability, but you actually have to find someone.
Though Thunderbeam uses colored coins, which is also a blockchain.
Which is essentially their escape valve.
Yeah. So, all right, maybe.
But this, by the way, addresses immediately one of the questions which we've had associated with this. Yeah. A, why we do it, and B, what is the benefit? Why would anyone else want to do it? Why would you want to sponsor what we're currently doing, building this platform?
Plus, you have not only the transferability, but you have the fact that it does go into an actual open market at some point. Meaning, even if you are just a speculator, like 99.999999 infinity of ICO investors are, at the end of the day, most of those guys are speculating, and this initially is giving a hedge, right? So you're getting a hedge against possible collapse of Ethereum, which Vitalik, I tip my hat to you on some things, but on the other side, there's a major flaw in Ethereum in the fact that the actual major use case of Ethereum, the overall use case of Ethereum, which is smart contracts, Ethereum can be worthless and smart contracts can still operate. So Ethereum could be worth 0.0001 cent, and smart contracts would still continue to operate on the blockchain. Major flaw. So that means that the actual underlying value of Ethereum is not tied to the current probably only or main use case, which is smart contracts. So if you want to hedge against the possible risk that Ethereum does go down to 20, 30, 15, whatever the case may be, this provides you that hedge for 9 to 10 months. But at that point, if you're a speculator, it also then opens up to an open market once regulation is in place, and it's legally able to offer up that PPT or the second stage of the token, which is the project participation token. It now is actually tradable on a secondary open market at a market price. which means if once that 9 months, that project is now, let's say, in a position that it actually has some additional value behind it, because now you have whatever this specific, let's say the specific use case in HanseCoin that was presented, which is the real estate project, well, now there's actually something being built and something being sold now as underlying value. Now you have a market price, and you can speculate on the fact that that market value may increase due to the fact that the project now has more underlying value. So not only is it appeasing to people who aren't speculators, but simply want to hedge their risk in the crypto market, it also is something that someone who does want to speculate, not only can they hedge out of the market, speculating on the fact that the market may fall, they have a speculative asset in 9 to 10 months, one that's actually regulated and truly is a security, not a security token, not some acronym that somebody pulled out of thin air to get some marketability around their ICO because they couldn't raise any money. But it actually is a security and actually carries underlying yield behind it, and also speculative value on the fact that the price could rise over time, the full time frame of the project, which is 2 to 4 years.
Yeah, I was just wanting to mention quickly that the crypto space at its peak was valued at about 850 billion. Right now it's about, I don't know, 210 billion. So that's about a 600 some $billion loss. Now, I know that there's people who are hoping it's going to go up from here. I think Novogratz, I wrote a recent piece that Mike Novogratz, the billionaire hedge fund manager, made a call on that Bitcoin has reached a major low and and now is the beginning of the new bull. But he said this also when Bitcoin was at 8,000. Now Bitcoin's hovering around, what, 6,300? I have sent some pieces, published some pieces out there. One's on cfi.co, one's on my virtualselfishinvesting.com website. I have a crypto corner on there, and I talk about the direction of Bitcoin based on some metrics that I use. Taken one by one, they have some level of predictive value, but taken together, they've been shown to have a very good track record since 2011. And I've been trading these cryptos since 2013. I do believe that Bitcoin is still very overvalued. I think it still has further to fall. I think this bear market is going to continue for, I mean, look, this is not investment advice. Don't take it as investment advice. This is just based on my views. And I do a lot in the stock market. I've written some books for Wiley & Sons, etc. So I love this. This is one of my passions. And I think that we're going to go, you know, Bitcoin may find a major low around, I know people say 5,000, that's a psychological floor, but it could certainly be, if it repeats the prior correction, it would go down to 2950. That's over a 50% correction from current levels. So if you're one of those $210 billion people sitting on crypto, I always urge people to sell half or sell a third. Take some of the bleeding away. You know, it's not bleeding, it's hemorrhaging, frankly. I mean, the average cryptocurrency has lost more than 80%. If you look at top performing cryptocurrencies, there's a website that tracks, and you look at the 10th best performing coin this year, the 10th best has still lost 78% of its value. That's pretty staggering. There's one coin that is profitable this year.
Don't mention it.
I'm not going to mention it. I just flattened my position. And then, you know, there's about, what, 1,600 of these coins that are active. So anyway, buyer beware. Be very careful about sitting in your coins thinking that this is the ultimate low, we're going to go higher from here. And you know, back in the dot-com days, I remember telling an investor, not just an investor, but he was running a $300 million hedge fund in New York City, and he couldn't sell in late 2000. He'd already suffered a lot of losses, and he said, look, sell half of your positions. That's all you need to do. And psychologically, that was something he was able to do. So about a year later, when the market was far worse off than it was in 2000, he sent me a case of Dom Perignon, and you know, I was very thankful. My point is, do what it takes to stem the bleeding, because this market, I think, has still a further way to fall. Again, this is not investment advice, but it's my own view. And I think we offer a very good platform that is we're building out. We are first mover advantage, and we are regulatory. We are compliant, and we are walking with the regulators every step of the way to make sure we remain that way.
I think that's the key thing. That this you just stressed it. The asset-backed token as such, as a concept, and with which we started, is extremely topical. It is timely. Yes, it may benefit from the fact that we've been discussing this over and over and over again here, that it may actually provide a hedge function whilst it develops to the point that it can sustain itself across so many different asset classes. Yes, we prove it with one asset class, And then underneath that, when it's regulated, with a then project case, we're even willing to pledge at the beginning our assets to support it, so that it's even when it's not yet a project participation token, that the initial one is collateralized. I mean, that's the key thing. It is asset-backed from the beginning. That was also one of the questions which we had. Is it asset-backed at the beginning? Is the claim right? It is. But it's not yet a use case at that time. The VPAT is to develop the infrastructure. And the hedge function helps us attract interest from the crypto space to develop this. Because we believe that this concept makes sense when it's taken over. Now, so we have infrastructure, we have a platform. Now we have to develop that use capacity, and that is what takes a few months. It may not take 9 months. This is the important thing. It's an outside date. We may very well be quicker. Certain things we have to do together and in parallel, in lockstep even, but we may very well be quicker.
Suffice it to say that the EFSA already has seen my face too much. I think they may actually license us just so I don't go there anymore. I think that's pretty much where we stand now. I think maybe a good format now moving forward is that we have some questions that were curated here or there. I think I can throw these out to the group.
Sure.
And we can start to.
We did already.
Yeah, we probably did, but usually it's easy to start from number one, even though we may have covered it, but we can just maybe take 30 seconds and recap this way if anybody's showing up late, or if you know, a couple of gentlemen may have fallen asleep or something, they can wake back up and, you know, get the questions they want answered. So I'll start from number one. So is VPAT being the virtual project access token, which is the first kind of step in this tokenization process, is it compliance, and does VPAT obey regulation? What about other tokens, the PPT, which is the project participation token, and the VBT, which is the virtual bonus token? So the question is, are they compliant and do they obey regulation? I think we've already covered this one, but essentially, I don't know if Axel, you want to take it in, or
sure. The approach is that VPAT is non-tradable, non-transferable, it is non-negotiable. As a concept, therefore, it is in compliance with all steps, if and when it doesn't promise anything else than what we're doing now, meaning building the platform.
For people that never worked at an investment bank, just non-transferable and all that good stuff, all that really means is that you can't do anything with it. Which means you buy it, you can't sell it, you can't give it to your grandmother, you can't go on the market and sell it to somebody on the street. You literally buy it and hold it, and you have no opportunity to do anything with it for 9 months. That's why it's non-transferable, you can't give it to somebody else. Non-negotiable, you can't sell it.
Good. Now, so up until 9 months, we gave this out and clearly described also in the info memo or white paper, as you want to call it, and the term being ambiguous, but I think it's an info memo, it's a brochure, it's important. You should read it if you have the time and if you like it, and if you're interested in doing something with it, you should read it.
Don't ever put money in something that you don't read the document. Just throw that out there. Just some general advice for everybody. I won't charge you for that one. So.
No disclaimer needed for that.
Yeah, no, that is advice. Life advice. Don't give anybody money until you read their info memo. That's or white paper, yellow paper, green paper, 1-pager, 2-pager. 7-pager, 9-pager, 13-pager. I like 15-pagers myself. I think they're quite unique. Your purple papers. That's what I call them. Anyway, go ahead.
It's good that it's Saturday, isn't it?
Yeah. It's Saturday. Purple papers are nice on Saturdays.
The key thing is everyone who goes with us the first step of the way, building the platform, has the opportunity that either within the 9 months or at the end of 9 months, we will issue no new project participation tokens. At that time, we will issue bonus tokens as well. Now, the benefit is that people see that the platform grows, and we can immediately spread out, not to one project. Yes, one project should be coming because it's ready to go and it's good to go. It's permitted, it works. It is a good use case for a project participation token, but it only works if and when the platform is done. And for that, remember, we need more than one.
Compliant and regulation. Let's clear through this one first. Then,
this is the key. That's the key thing. These are two separate worlds. Yeah. World 1, World 2, and we focus on World 1 with VPAT.
So basically, just to sum up, so the VPAT, obviously, because you can't sell, you can't do anything with it. It's not a security in Europe, and it wouldn't be a security in the U.S. either. It is not a security. However, once you get to that PPT stage, that definitely would fall under current security regulations. We have no idea what's going to happen in the next 9 months when it comes to actual token legislation, if it actually is going to happen in the next 9 months, which it very well could. Point is that even if it doesn't happen and we have to actually adhere to current securities regulations, we'll be able to do that within the next 9 months with licensing from the EFSA here in Estonia. On our side, which would be on CoinMetro's side, which is MTF, which is a multilateral trading facility, which allows you to trade unlicensed, here it comes, securities. And then on their side, with portfolio management license or something of that same nature, would allow them then to basically manage the investment through our MTF. So that's and then so the case in point is that VPAT does obey regulation; it is compliant. The other tokens will be compliant before they're actually issued. That's the.
I think that is the key point. We will work out exactly in the next days already the steps which we have to take in lockstep, and that's why there's currently only a private sale. We're working out the steps which we have to take in lockstep in November, in December, to accelerate the process of this licensing. I think we're well prepared. We might actually do this much earlier than everybody believes or considered, and as a consequence, we will go out with prospectuses at some point in time, even as what is then a portfolio management or investment firm licensed entity, in order to bring you what will become the first regulated asset-backed token, which then becomes a tradable version. And that will be backed. Right, so...
By an asset.
Oh God. One which is in euro, and which was used as an asset backing even for the VPAT.
Just to, you know, I like to go off on tangents, but I just to comment on this, because Axel was talking about in the previous, wasn't even a question, just the previous conversation about hedges, and I talked about it as well. But one thing you need to understand, I know a lot of people are saying, well, what happens if, 2 years from now, a year from now, or the guys that, I don't know, think Bitcoin's going to be worth more money tomorrow. Let's say there just happens to be 9 months from now, right after 9 months, a huge bull run. Then I'm sure somebody in their mind is saying, well, why would you want to hedge against that? Obviously, you wouldn't want to hedge against that, and you're right. But the point is that the hedge right now, the applicable hedge right now, is against basically the entire crypto asset market, because it's all fallen, except for the case in point of one token, which is probably highly manipulated. I'm not going to mention which token that is, but there's an acronym and it starts with a B and ends with a B, so you can figure that one out. But so in the case, the entire crypto asset, had fallen. That's why the hedging use case right now is the entire market. However, you can hedge, the hedging use case can be hedged against anything, which means at some point, let's say even HanseCoin themselves, when they create another, their own coin, let's say, can create a coin that's backed by a multitude of assets. That can become the hedging use case number 2, whether that's gold, whether that's some fixed assets, hard assets, whether it's, there's always going to be a crypto asset, whether it's an asset, whether it's tokenized asset or it's an actual crypto, that's going to be a hedge case use, which means down the line, maybe there's a specific cryptocurrency that's really in the gutter one year, and a new project comes out, but they just allow you to hedge against that asset. So you'll be able to use that asset to buy into the ABT token. The asset-backed token. So yeah, because I know I've seen it somewhere. I don't know if it was on our own channel or somewhere else, but someone did ask, like, well, what happens if there's a bull market? Well, bull markets never cover 100% of assets ever. All right. So even when there's a bull stock market, let's say, there's also stocks that lose money. So there's always going to be a hedging case. Even if it's not market-wide.
And then the thing is, I would always argue again, why do you want, most people do diversify. Yeah. It's just the way things are. So I think we're a great platform for that tool of diversification, especially given where things are at right now. But if we were in a bull market, let's say everything was going to new highs, I would still say, why do you want 100% in crypto? Don't you want to take maybe 20% out and put it, people own stocks and bonds and real estate. It's just a more prudent way to become a stronger investor psychologically. So when the shit hits a fan with one of your in your portfolio, you're not all your eggs aren't in one basket.
Especially when all the shit hits the biggest fan, like right now. Lots of shit hitting lots of fans. All right, so jump ahead.
You just explained yet again the advantages of the platform, which would be question number 2.
Yeah. That's the question we have on list number 2, what are the advantages of your platform? I think we've covered those. If anybody wants to sum them up, be my guest. But negotiability and transferability is definitely one. being able to diversify is 2, being able to hedge against, let's say, more volatile assets is 3, which also is part of diversification.
And having access to asset classes which otherwise you would never get a hand on, because that is the key thing. Those development assets which are in that bracket, in that gap, private investors who will be in future addressed as soon as this is regulated, and today only participants, will not have the possibility to access this. If you work with us, we'll get that done.
Also, you just mentioned regulation. That's actually also a benefit of the platform. I'll tell you, there's a lot of guys talking about STOs. We're an STO, we're an STO, buy our STO. Even though we're unregulated, illegal in every country in the world except maybe Mogadishu. So, you can't talk about offering a securitized asset and not talk about the regulation behind it, because it just doesn't make any sense. But anyway, moving on.
Future plans to expand.
Future plans to expand. Next question. So I think that's also already been topically discussed. Part of that is obviously that it's not just about one use case; it's about many, many different use cases. Part of the expansion is that the, let's say, HanseCoin Platform, or the ability to tokenize assets based on a regulator-approved tokenization method, will be part of, let's say, our ICO Express platform. It'll be a module, which means that we, CoinMetro, will be bringing on companies that want to tokenize hard assets. Whatever that asset may be. It doesn't necessarily need to be real estate. We've already talked about this. We talked about machinery. You talked about.
Yeah.
You can even go on and talk about all kinds of different assets, especially when you talk about the great thing about tokens, and people that say that there's no use cases for tokens is quite ridiculous, because, to be honest, the problem is that people equate current technology with the fact that they can't fit it into a use case. Again, that's the wrong way to look at it, because technology does evolve, as Chris said in the beginning of this panel discussion. And as that technology evolves, I can sit here. We could have a panel discussion for 3 hours, and I'm sure we could come up with 7,000 use cases. I mean, anything you can possibly imagine. And one of those, in real estate, you have to understand that in real estate, how many inflows and outflows of capital do you see in a real estate project? Just a real estate project. Let's say it's a real estate project that ends up being Airbnb rentals. Let's just throw that one out there. Let's see how many use cases we can think of in 30 seconds. First, you got to build it, right? You need to bring in capital to build it. Well, that could be tokenized capital. Why not? Especially if all those different people that are building that, all the managers and the project managers and the builders, can all use that in their internal ecosystem. Meaning you can make payments with it, they can accept it, they can use the liquidity back and forth to fund other businesses that are also on some other type of blockchain. Then you move on to the fact that you need to sell it. Well, how can you accept payment? You can tokenize that too. And then when you actually get the payment, and when the rentals come in, how do you get the rental money? Tokenize it. How do you pay the people that actually deal with the rentals? You tokenize that too.
And all of those steps can actually drop the transaction cost.
Yeah, so
that's the key thing.
Yeah, you have liquidity, one, because you have internal liquidity. That's the same token that's flowing between all these different steps of the project. That's one, and we can go on and on. There's people that come in to pay for it, the people that actually get paid to clean the properties, the people that the cooks that you hire to come. You can basically create a microeconomy with that token. And again, you're definitely lowering transaction costs. You're also lowering, you're actually increasing speed that you can actually move these funds around, and you're actually increasing security, because at the end of the day, when you have to deal with credit cards and you have to deal with all these other things, not from the get-go, you're dealing with bank wires and you're dealing with IOUs and LOIs and all these different things when you have to do the construction phase, and then you're dealing with escrow and things like this, all these things when you're actually selling the property, and then you have to deal with real estate costs and notaries and all these different things. All these things can be reduced with a token. Every single one of them. I mean, that's one use case, and that's one overall use case that covers, 30 different use cases inside of that same
This
bubble.
comes back to actually what we said when we first sat together with you, and then what we even discussed in our real first AMA.
Yeah.
All of this boils down back to technology allowing us to reduce costs, make things more efficient. That's a very boring job. This is not what people want to hear. I understand this. This is fair. This is okay. But we're not there to only tell you what you want to hear. We can tell you how we believe that we can do it and make it more attractive as a consequence thereof. But the attraction is actually in having the platform available. And if we can do this together, that works. So, are all our incoming ETH converted to euro immediately? Well, yes, for the time being, definitely. And that should be the case because Ethereum is falling. Now, we do reserve the right to actually retain certain of the Ethereum at a point in time when it were to be sensible. Doesn't look like it at the moment, may I say, but we'll try to be logical in our arguments. Should that be the case, we will certainly we will keep some of the liquidity at hand, but for the moment, converting right away to euro, because we have euro assets which we are working with, respectively, a euro asset platform working with. I mean, seriously, we would not be smart people keeping it in Ethereum.
Unless one Ethereum actually was valued at one Ethereum in the real world, and then we could just transfer it to somebody who could actually do the job for one Ethereum. Unfortunately, not yet there.
Okay, right. Then.
Yeah, I think
Please, sure.
I know. I feel like an old school news anchor because I kind of lost my place, and I feel like I need to do this for a few minutes.
Kevin, why don't you tell me how long it takes to do the actual buildings? See,
months.
Months, exactly. All right.
Some time between 1 month and 600 months. I'm pretty sure I'd be accurate. No, it's definitely not 600 months, but yeah. It's like our friend Dr. Doomer makes his prediction that there's going to be some crisis between now and 2375. Oh, I bet you're right.
Yeah. But it boils down back to the fact. So let's talk about, so to say, world number 2, the use case. If and when you look at use cases, you actually have to follow, again, the boring real world. And in the real world, unfortunately, things do take time. And they require a lot of parties working together professionally in a suitable organizational format. You need the appraisers, you need the engineers, you need the architects, you need the interior designers, you need construction companies for various sorts, from infrastructure, utilities, sewage, the likes. You have to have the construction companies who can build the core and shell of the building. Now, all of that has been assembled for the use case, so the use case as such is ready. And if you are really seriously interested in how it works, we posted a couple of answers in that regard, but in a short form, it takes about 6 to 7 months for most of these buildings to be built to the point that the interior design, actually, and the interior infrastructure can be built in. So the fittings and furniture and the likes, which have to be brought in. I mean, kitchens, for example, which are supplied with these. There is a timeline which you can follow if you like. We have not just a roadmap, but we have a timeline.
Don't use the roadmap, please.
All right, yeah, of course.
That's 97.
It's not a real. It's also not a real timetable, right? Okay.
Schedule.
It's a schedule. It's a construction schedule which has been brought out in a construction tender. So people have worked out a specific format with the project manager at hand, which is a very reputable firm in the local market, with the engineers at hand, the architects who've been hired and who have worked this out over time with us. In consequence, what we believe is that all 3 sectors in that use case can be run in parallel appropriately. As you can see in what is the use case description, I should advise you only to do this. Please have a look, read through it. It is very simple logic. It's a necessity to follow a certain construction schedule. Otherwise, you can't get the buildings to the point that people actually want to actually buy them. Now, the thing is, none of this kicks off unless actually pre-sales are there. Typically, banks here in this environment, as well as for many other use cases, will not accept residential real estate to be built if there's no 50% pre-sales. So the brokers who are hired for this project go out to the market based on the current specifications, based on what is planned, and based on the construction schedule when we actually hit the button to go. And we're ready to go. Now we have to build the platform, then we present the use case, then we go to market, and then it's being sold. Right. Further details? Nah.
Further details?
We have it in writing. Okay, we've presented it in writing. If you want to have a specific conversation about this, please feel free, reach out to us, have a talk with us. We'd be delighted to talk to you in that regard. Right, you go.
Perfect. So I think I must have been missing a page or something because it took only 5 minutes to figure out.
Too many questions, but many of them we've already addressed in that regard, if I may say.
Okay, so are all incoming Ether converted to Euro immediately? So the answer to that one, there's actually an answer written out here. I'm going to give it to you quickly. Yes.
Good.
Okay, we already explained why, so we don't have to do that again. What happens if the soft cap for your asset raise is not met? Is the next question.
That's very straightforward. If neither the hard floor, and that's the more important thing than any soft cap, because the soft cap, nice to have, but it's not the key thing. I presume what was meant with the questions, what happens if not enough money is raised in order to secure what is a project and move forward with the platform. Now, obviously, a use case is only as good as it is time value, meaning at some point in time, if we were not to develop a project in time, not raise enough funds in order to build out the infrastructure, alongside what we've invested into all of this ourselves already, then at such point in time, we would have to secure another use case, because the use case will have to be built out in any event. The project has to go forward, it is already moving forward, and as a consequence, it can't wait for too long. If that is the case and the platform is still developed, so the hard floor has been reached, platform is developed, but the use case were to have to move forward because there's not enough so that we can, in a regulated form, issue project participation tokens and raise the funds required for this, we would have to secure another use case. Fortunately, we do have 3 additional use cases which we can present, which have different time horizons, which are very much comparable to this. Some of them are smaller. So if we were to have to reduce the exposure, we could do so. Would it be effective? We believe this one is the effective one. We believe the size documented here is correct. As a consequence, we'd prefer this one to go forward, but if need be, we'll build out the platform for other use cases.
Perfect. What if we can't get approved to go out with the development, or when the approval is getting delayed, or if the approval is getting delayed for any unreasonable amount of time?
Well, the development, there's 2 different aspects. One is the infrastructure and platform development. That requires no approval. That requires a lot of work. That requires coordination with you and your team. We have to make sure that we're getting that done, and that's homework, which we have to do at the moment. We are doing it. Secondly, in terms of the token development or tokenization approach development, that is already being done for quite some time and very, very collaboratively in direct contact with legal, tax, and the regulator, and with your feeding in your experience from CoinMetro. And as a consequence, we feel rather comfortable that the approach which we're taking, which we described a little earlier today, where we have, on the one hand, the preparation for what becomes a regulated token which can be floated under the current securities regime, because that's what it is at that point in time. It becomes regulated as a token under the Securities Market Act. Nothing else will work. Kevin described it meticulously. There is no security token. It will be an asset-backed token which falls under securities market regulation. As a consequence, where that requires approval. Should that be delayed? Now, there's a technical process. We explained it in our paper. We explained it in the dreaded roadmap. But we explained also that we are accelerating our work in that regard so that we can file for the respective licensing starting in December with a view to having that available end of January, respectively in February. We'd like to make sure that in parallel the respective procedures are taken for the prospectus so that we can issue both within the EU, coming out of Estonia, a respective regulated prospectus for what is then an asset-backed token but regulated, from a firm which is regulated, and time allowing, resources allowing, and regulation allowing, we would love to go and create a PPM and have it regulated for use in the US. Because there is a substantial market of people there who would be interested in seeing the first asset-backed token regulated and going into both markets, which we believe matter a great deal. Now, we're not as good yet in our, say, assumption as to how to deal with Asia, but I'm sure that we're going to be taking good advice as to how to approach Japan and Singapore at a later stage.
Cool. I'm going to skip over one of the questions just to go into one that's you had just touched on, which is, can I own HanseCoin if I'm a US resident? I can handle that one if you want.
Yes, please.
Currently, no. And the reason is this, is that there are options. Axel just mentioned PPM, private placement memorandum, which is part of U.S. security regulation law when you have a non-registered or security in the U.S. But when you go for an exemption, whether it be 506D, 506C, 504, et cetera, you are stating you are a security and you're asking for an exemption. So that opens up the gate to then the European regulators say, well, if you're telling the U.S. you're a security under their very specific well, I shouldn't say specific, very open-ended definition of a security, then here in Europe, with our very specific definition of a security, you definitely fall into that same category. And you don't necessarily want to do that when you're right now with the VPAT, which is absolutely not a security. Once that paperwork is filed, now you run into, on the other side of the pond, you're going to run into issues. So, as Axel said, the goal would be once the PPT is ready, once it's regulated here in the EU, at that point you file the PPM in the US, allowing them to bring on US investors at that point. Right now you're dealing with contributors with the VPAT because it's not a security. However, the PPT will be a security, meaning that you will allow US investors and worldwide investors once that is regulatory compliant and ready to roll.
We just received a notice here addressed to the person in the blue shirt. That would be me, Axel. I'm sorry, we were dealing with YouTube for the first time in this regard. I apologize for being late. I just refreshed this image. It says, you in the blue shirt, what's a CEO? I presume you're referring to the Chief Executive Officer, but if that addresses the question, please let us know. Otherwise, I mean, that's what it is. We haven't had that yet.
Yeah, caring emotionally, I don't know what else it stands for, but yeah, it's the boss. Okay, so let's see. Okay, so should we jump back to this one? Let me see. There was another question here.
It's really odd.
You can tell when there's just old guys in the room when you use paper.
Oh yeah.
So let's see. I like paper though. I like it. I'll do that. What can HanseCoin offer me that I already do not have access to? I can already direct invest into property or buy equity in residential property via crowdfunding websites. What I cannot do as a UK citizen is easily invest in overseas property. How does HanseCoin fix that problem? I don't even know if we need to answer that part of the question. But anyway, in addition, with will HanseCoin give people in emerging markets easy access to, say, European and American property? What kind of restrictions might I face if, as a UK citizen, I wanted to buy an ABT for a US property?
Well, for US property, let's start at the back end of this. For a US property, that would have to be, first of all, available to be used in the US, and we would have to be able to have a use case in the US. So this is a few steps into the future. Now, I can't deny that we are very attracted to that, and we believe that one of the most liquid markets in that regard, being the United States of America, as well as Canada, are both exceptionally interesting, but it's not something which we will be able to conquer within the next couple of months. That will take time. Now, when the platform is properly sorted in terms of infrastructure development and software, we are very much capable of whitelisting people who have ideas for these projects, even on the development side, and we will then be able to white label what we're doing even, so that people who can work with us at a future time and developers who know their market over there will be able to collaborate with us to bring projects to that market. At such time, when it is regulated and available as a solution, anyone who is a proper and fine person and non-criminal and on-boarded, therefore, appropriately, could invest in such overseas property, even in an asset-backed token, which were to invest, for example, anywhere in the current, NAFTA 2.0.
Mm-hmm. So I think we've covered actually pieces of this already in different questions, but you say you can already directly invest in property, which is obviously true. Anybody can do that. Or buy equity in residential property via crowdfunding websites. Correct. We already talked about the fact that those specific types of investments aren't very liquid, meaning that if you need to quickly get out of that type of crowdfunding investment on most of those platforms, it is impossible. Once you're in, you're in. And there's no easy way for you to direct, or let's assume you're in an investment that you don't necessarily want to get out of, but there's another opportunity and you have liquidity locked up in investment A and you want to move some of that to investment B, it's impossible. Here, however, there actually is an opening, and it's actually easy to do. It's easy to transfer on a blockchain. It's easy to move liquidity between one project and another, whereas on most of these crowdfunding websites, it is not. And correct, you actually stated one of the use cases in your question, which is, yes, let's just assume that the PPT now, or the project itself, is now regulatory approved around the world. Let's make that assumption. And obviously that would be a goal, and it is a goal. But let's just assume that's what it is today. And yeah, you're sitting in the UK and you want to invest in a property in Singapore, one in Australia, another one in the US, and one in Chile. Doing that via conventional means would require, one, huge transaction costs. Two, it would require delays, which may actually end up meaning that you miss the investment, because some real estate investments obviously can either get sold very fast, or perhaps you have a time window of maybe 10 business days where you have to move your assets, meaning you have to liquidate from one perhaps, or maybe you don't even have to liquidate, but you have to actually sign big agreements. Now, we all know that agreements, not everybody lives in Estonia, where you can take your little ID card or your little mobile ID and sign something and get things done pretty relatively fast. Most of us live outside of Estonia, which means that you need to go to notaries, get things apostilled, move documents, all this other stuff, which could take you 10 days. And then what? Your window's closed. So inside your question, you're basically stating, yes, that's one of the major pros for a type of platform like the HanseCoin platform, whereas you can diversify around the world, again, once regulatory approval. This is just an assumption based on the fact that now it's open and white labelable. Once it gets approved, the beauty of this is we get it approved in Estonia, and someone in the US says, I really want to do that. And we say, well, we're not really ready. And they say, well, we are. We have all the licensing we need. They white label it, they use it, now it's available in the US. Doesn't necessarily mean that HanseCoin necessarily needs to go to the US, Australia, Singapore, etc., and do everything that's needed in those local markets to get this thing approved. Other people will have the licensing already. Other people will show interest in the fact that they want to use the platform, meaning that they can white label it. And yes, as far as I know, I don't know any platform right now, any tokenization structure, any structure that would allow you to easily get in and out of real estate equity investments or other assets around the world quickly, easily, that are easily transferable and negotiable on secondary markets.
And this is why we've had an intense amount of interest. I put up an article on CFI.co recently describing what we're doing, and interestingly, Axel's just mentioned NAFTA 2.0. We have someone who has a property in Cancun. He asked if he could onboard, get it onto our platform. We've had some other questions. There's a guy in South Africa. He made a lot of money in the tech. He does not blockchain, but other forms of tech, and he wanted to know. He's got a lot of land.
There are other forms of tech besides blockchain.
Oh my God!
So
somebody should do a panel discussion.
It opens up a whole new edge of this discussion, and because that's another thing. May I stress this before we go further? Blockchain is nice and fine, but to match it with the technology which you actually need to manage everything else, be it enterprise resource software, be it actually construction planning, be it with what we do with the underlying assets. And you nearly got to this earlier. The assets don't have to be real estate only. There are, by the way, assets which in certain jurisdictions are considered real estate despite the fact that they're very mobile, such as ships. Depending on the size of the equity requirement in such transactions, ships could very well qualify. Rolling stock and rolling stock portfolios, small and medium size, could qualify. Trams, even technically, mobile stocks such as buses could qualify. And that is the key thing. There's a lot of opportunity, there's a lot of options in that regard for a platform which creates asset-backed tokenization. Now, the thing is, it's not just the financing function, it's all the surroundings, it's the maintenance, it's the servicing. All of this could actually be fielded in with blockchain technology. That's where we see actually the real growth area in this. But the tokenization, which we start for each and every project, allows the project to be utilized in that form of blockchain. Now, does that sound like a lot of gobbledygook? Probably to some, that's fine, but it's just work. It's essentially the same thing which we've always been discussing about the internet. Do many people, you always ask, do people actually understand how the internet works? Not necessarily, but they use it every day, every hour, every minute. 20 years ago, nobody trusted any internet banking because it doesn't even really exist in that form. There was a bit of telebanking here, there, and whatnot. The French had it even with their military beforehand. But the risk-averse normal customer couldn't trust it. This trust and verify comes later. Blockchain is at the verge of doing all these steps much quicker, in an accelerated development path. But we're not there yet. We're close. We have to build it, and we'd like to build it with you.
So we have one question here that I think was brought up on a FAQ at some point as well. But so we have a question that says, please unexplain unpaid taxes to the Estonian government as raised here. And there's obviously I'm not going to read out the Reddit link. but it's a Reddit link.
Well, HanseCoin has no unpaid taxes. The use case company has no unpaid taxes, and an associated affiliated company of our family enterprise is currently in discussions with the EMTA about the failed reporting of one former employee, and that's going to be sorted as well. But then again, it's not an entity which has ever taken money from anyone else other than the family itself. And whether we have a tax liability there of, what is it, 5,000 euros under discussion because of some employee having done things which we believe lend themselves rather to, shall we say, less helpful behavior, it's a completely different matter. Nevertheless, even that has been structured, and I tend to believe, and based on current information, that this will vanish in the next couple of days as well.
So point being is that, sometimes businesses get into litigation.
Yeah, we discussed it.
Real businesses, not projects. Projects don't get into litigation; they just end up going to jail. I think we covered. I don't know if there's any.
No, other than the question for the man on the blue shirt, there was nothing on YouTube. But then again, I didn't expect that much today.
Yeah. Well, I think it was kind of short notice. I did screw up the last meeting that we were supposed to have, this last panel discussion. So that's my fault.
Well, we addressed the key things. We will do another panel, hopefully a very educated one with lots of people who know everything, and we three will then observe what they say.
Perfect. I'm just checking our own Telegram just to see if anybody. Somebody's saying I have an egghead. I don't think it has anything to do with this this specific discussion,
but we can confirm that.
Yeah. There you go. Confirmed. Let's see. Yeah, I don't see any question here specific to this. Let's see.
They all want your grey hoodie.
Yeah, it's not a hoodie, guy. I don't believe in hoodies. Just so everybody knows, it's a necky. It's a necky. You'll never see me in a hoodie ever. You couldn't pay me to wear a hoodie, and you'll never see it. Never happen. I don't even like this, but unfortunately, I can't wear a T-shirt now in Estonia because it's starting to get a little chilly, and it's just not work. It just doesn't work out anymore.
So as soon as we got the infrastructure set up and everything done, then we're going to issue HanseCoin hoodies. So for everyone,
and I will cut the hoodie off, and I'll use it as a dish rag or something, and then I'll reformat that hoodie into a necky. I don't even know if that's an actual term, but I made it up. So
right,
yeah.
And now to something completely different. We wish you all a free and happy weekend. Enjoy yourselves. Don't worry about blockchain for a little while.
Yeah, don't look at prices. If you could, if anybody's religious out there, pray for Ether at 700 on Monday. I'd like to cash out on Monday at 700, whether that be euro, US dollars, and pounds would be great. But just, please put your prayer caps on, do whatever you got to do. The rain dance. I don't know. I'm not really a religious guy, so just do whatever. Rain sticks wherever you need.
There is something, that saying, be careful what you ask for. I just had a thought. If that did happen, the first reason that came into my mind was, and I don't know how many of you know this, but in 1935, the U.S. single-handedly overnight devalued the U.S. dollar by 41%. So that's what came into my head, is that the fiat now is universally devalued because of all the quantitative easing that's been going on for the last decade. I used to say in interviews, race to zero between the pound, the dollar, and the yuan.
Yeah. So 700 on Monday, 35 on Tuesday. Just give me enough time to cash out, and we're good to go.
All right, let's get some work done.
All right, guys. Thanks for showing up. We'll see you again at some point.